Hi guys, it's been a red week on the market. Last week the market was hotting up and I thought it might lead to some nice backside setups this week. Tried a few things but nothing really worked out. I'm in a swing trade, so we'll see what happens with that and I'll share that in a little while as well. But today I thought it'd be good to talk about reasons not to take a trade. So I'm always tracking data and seeing why a trade could work, but equally why a trade might not work. So going to look at a third day surge, which I didn't think was a good setup, and the reasons why. Let's go to the chart. So first I'm going to briefly share the swing trade that I'm currently in, which is UAVS. And this is the daily chart over here, and it's moved, it's a multi-day runner, moved on high volume, gone from around the 80 cent area over $2. And then it's had this nice pullback, and then I'm trying to swing it for a bounce here. I wasn't planning on swinging it, I've just stuck to my plan and going with what the chart is giving me. So this is the intraday chart over here on the 15-minute time frame. So kind of the start of its run here, pullback, already had a big bounce here, but it's continued its move onto new highs, and then another pullback, and then another push up to the previous highs there. So now it's becoming more of interest once it's kind of hit these highs, and now it's in this retracement. And I was just sort of watching it, wasn't of major interest, but kind of just see this very clear downtrend, like a sideways action, then a dip, sideways action, dip, sideways dip. And then I was just seeing if there was any sort of trend line there. So I was on the 15-minute time frame, and yeah, I'd say that's, you know, in this nice downtrend here. It's got different touch points on the trend line. So I was looking for a break out of this trend, but also looking at this support area here. So I was thinking actually this is going to continue even further down, maybe to this area, which matches this area here. And then if it breaks trend, that would be could be a really nice move. However, it seemed to want to break trend a little bit earlier. I just zoom into this a bit more on this day. So my thesis was, if it does break this trend line, I will take an entry. It's also pushing over the previous day's close as well. So this was pre-market on that day on the 15-minute time frame. Kind of wanted it, was a tricky one actually, because it's broken trend, so I wouldn't actually expect it to come back down here, but yeah, I had to sort of play the red-green area. So took a piece pre-market, 126 I think it was, and didn't really get enough shares on it, so waited till market open. And this was on a Thursday, and I don't work on Thursdays, so this was ideal for me. And then yeah, added to my position on the market open and got an average entry of 129. Can see, yeah, it is wanting to break that trend, and then had a nice push, and just waiting for it to play out really. I was hoping this was just going to be like a one-day move, and here I'm up like 10%, but I'm not really in the trade for 10%. I'm looking for more than that. So although, yeah, I could have just taken a nice little profit, I'm just trying to stick to my plan. And then it pulled back down. I'm risking off this area here. And then it pushed onwards after hours. So that was starting to look a bit more promising. I thought, actually, you know what, this is probably going to go on to bounce the next day, now that it's still holding well above my risk. And then it kind of, the next day, just came back down, but it's still keeping my risk intact. So I'm just going to let it play out. It's not looking great, but it could continue the move. It's broken trend, or it could just fail. But, you know, I've already set my risk with what I'm happy to lose on this trade. So just going to see how it plays out next week. So going to go over to FLYX. Now this was a setup from a few weeks back now, but I made a note of it because I thought this is a good one to do a video on when I get the chance. It was a third day surge setup, which I didn't think was a good setup, but I can understand why people would look at this and go, this is third day surge territory. So this is its daily chart over here, day one, move that out a bit, had a big run on high volume, and then it's had a nice retracement and a nice drop in volume, and then you're expecting potentially a surge on this day. And from the daily chart, it actually looks all right, but if we go onto the intraday on the 1 minute time frame, several reasons why I didn't like this. So one is this bounce here from after hours to here. It's quite a significant move there from this area. If you entered somewhere around here, sold here, it's like, what, 26%, something like that. Not to say that I would write off the setup because of that, because a lot of third day surges I see, they can have these 20-30% bounces in between, but I don't like it. The more they bounce, the less likely I feel it can surge. But I do see it happen a lot, so I'm still tracking that data. So that's one reason. The other reason is I like the day one to have range so that it can move into that on day three. And on the daily chart, it does have that. But if you go into the 1 minute time frame, that peak on the daily chart is literally like a 1 minute candle. So that for me is not a strong high. It's like gone up there for a second, failed, come back down. So for me, that was quite significant actually. So the other reason why I didn't like this setup was the dilution on it. So if I just bring up dilution tracker, you can see if we scroll down, I've got all these warrants at 5 million warrants that can be exercised at a cent, and then another 1.2 million at a cent as well. So I didn't like that at all. And also they had a shelf, which they basically they can really dilute this stock and potentially do an offering on it, which actually they did an offering on it of, say, 15 million is the offering amount, which really dilutes the stock. So if we go into the chart again, they did an offering on this day, which is probably what this candle is here. So that for me, with the other things that I've mentioned, the warrants that they can exercise at 1 cent, the offering, the range of the stock, the bounces in between, all those things put together, it's not just one specific thing. I won't write it off for just one reason, but putting that all together, that's not looking good at all. And it does depend on like the size of the offering relative to the volume traded. So it's not like a one size fits all, but I'm trying to look at the bigger picture of all these things put together. And this could very well it might have had a surge. It might have done, but if I'd have taken that and it had surged, it would have put me into bad habits, because I would think going forward this is a good setup, when in reality I don't think it is. Other people might think differently, but that's just my thesis and from the data that I'm tracking. And if we just go on to look at what it actually did. So I was looking at this on the Sunday night, and then this was on a Monday, which I work on Mondays anyway. So let's just show what happened. It tried to surge. So if you were trading this, you might have been like, oh yeah, this is working. But then it just failed and did this massive crack. So whether it failed for the reasons I've said, I don't know. But I think it's pretty good reasoning not to take this trade. As I say, I can be wrong about these completely. I'm still learning, but it's just my opinion. What is nice about this setup is the areas of support. You kind of got support here, support, support, support. That's nice. So I can see why people will be looking at that thinking, yeah, that's a nice base for it to surge off. But again, that's kind of one pro against all the other cons that I've mentioned. So yeah, that's FLYX. So my analysis will get better with the more experience and screen time that I get, but it's such a nice feeling to feel confident in not taking a trade, whether it goes without me or not, but then also even sweeter when it does fail. Of course, I do miss out on moves because my thinking is wrong, and also vice versa. I take trades where my thesis is wrong, but I'm just trying to develop my data so I can play the odds and know over time which criteria is most likely to work. So for example, if a stock's had an offering, it might go without me, but I know 9 out of 10 times it's probably going to fail. I don't specifically mean that, it's just an example. It depends on the size of the offering, other factors, and putting them all together like I've shown in today's analysis, and also tying it into market conditions and what's currently working. So that literally changes from day to day, and I'm still trying to adapt to that side of things, but that's where I'm at the moment, and that's a bit about reasons I look at why not to take a trade. So cheers for watching, catch you next week.